Welcome to TalkTickers. We cut through the noise of earnings calls to bring you the insights that matter, especially if you're an experienced investor.
That's right. No waiting through hours of audio. We do the digging for you.
And today, we are diving deep into Meta's first quarter 2025 earnings call. A lot happening there, especially around AI.
Definitely. A strong start to the year financially, but the real story, I think, is the strategic direction they're signaling.
Okay, let's get the numbers out of the way first. Give us the snapshot.
Sure. So Q1 total revenue hit $42.3 billion. That's a 16% increase year over year.
16%. Pretty healthy.
Oh, yeah.
And constant currency.
Even better, actually. 19% on a constant currency basis. Total expenses were up too, but only 9% to $24.88 billion.
Which means operating income looked good.
Very good. $17.66 billion, giving them a solid 41% operating margin.
And net income. I saw something about the tax rate.
Yeah, net income got a nice boost from a lower tax rate, just 9%,
Yeah.
mostly due to excess tax benefits from share-based compensation.
All right, that happens. What about CapEx? Where are they spending?
Big spending on infrastructure. Capital expenditures, including finance leases, were $13.7 billion, really investing in the future build-out.
Makes sense given the AI push we'll get into. Free cash flow.
Still strong,
Yeah.
$10.3 billion for the quarter. Gives them a lot of flexibility.
Returning cash to shareholders, always a focus.
Absolutely. They bought back $13.44 billion of their stock, Class A shares, and paid out $1.3 billion in dividends.
So overall financial health, cash versus debt.
Looking robust. They ended the quarter with $70.2 billion in cash and marketable securities. Debt stands at $28.8 billion, so a very strong balance sheet.
Okay, let's break down the segments. Family of apps, the core business. How did that do?
Overwhelming. Revenue was $41.9 billion. That's up 16% year over year, just like the total revenue.
And that's mostly ads, right?
Overwhelmingly. Ad revenue was $41.4 billion, also up 16%, or 20% constant currency.
Any particular regions driving that ad growth?
Yeah, they highlighted the rest of world category and North America as being particularly strong.
Interesting. And what about the ad metrics themselves? Impressions versus price.
So ad impressions served were up 5%, but the average price per ad jumped 10%. So they're getting more value per ad shown.
Okay, that makes sense. Now, the other side of the coin, Reality Labs always gets a lot of attention.
Right. And the picture there is a bit different. Revenue was $412 million, which is actually down 6% year over year.
Down why? The dip?
They pointed to lower MetaQuest sales, the VR headsets, although they did say strong sales of the Ray-Ban Meta AI glasses helped offset that somewhat.
Ah, the smart glasses. Heard those are doing well. But the bottom line for Reality Labs, still burning cash?
Oh, yeah. Operating loss was $4.2 billion for the quarter, still a significant investment area.
Okay, so that's the snapshot.
Hey.
Now let's get into the deep dive. You mentioned AI as the big theme. Sounds like it dominated the call.
It really did. It's clearly the central pillar. They laid out like 5 major opportunities they see driven by AI.
5. Okay, let's unpack those. What's number 1?
Improving advertising. Using AI for, better targeting, better creative generation, just making ads work harder.
How's that playing out so far? Any results?
Some promising early signs. They talked about tests on Reels ads using new AI recommendation models, seeing a 5% increase in conversion rates.
5% is not insignificant.
No, it's not. And they also mentioned about 30% more advertisers are using their AI creative tools now.
So adoption is growing.
Right. And the long-term vision here is pretty ambitious. They see AI transforming advertising into this kind of AI agent, delivering measurable business results automatically almost. They even hinted it could, grow advertising's slice of the global GDP.
Wow. Okay. Big vision. What's the second AI opportunity?
More engaging experiences on the platforms themselves, using AI for better content recommendations.
You get this working. People staying longer.
Seems like it. Time spent is up 7% on Facebook, 6% on Instagram, and Threads saw a huge jump, 35%.
35% on Threads.
Yeah.
That's massive. How many users does it have now?
Over 350 million monthly active users, they said. Plus, AI is enabling new types of interactive content.
Okay, interesting. Third AI focus.
Business messaging. Think WhatsApp and Messenger. Billions of users there.
Right. How does AI fit in?
Well, the idea is that AI can overcome the high cost of labor, especially in developed countries, for businesses interacting with customers. So, AI agents for customer support, sales, that kind of thing.
Automating business chat, essentially.
Exactly. A potentially huge market if they can crack it.
Makes sense. Number 4,
Meta AI itself, their own AI assistant.
seeing much traction.
Apparently, yes. Nearly 1 billion monthly active users are interacting with Meta AI across their apps in some way.
1 billion. Wow. What's the focus there?
Right now, it's about deepening the experience. More personalization, better voice capabilities, entertainment features. They even launched a standalone Meta AI app.
How do they plan to make money from that?
The plan seems to be scale engagement first. Then later, explore things like product recommendations, maybe ads, or even premium features. Build the user base, then monetize.
Standard playbook.
Okay.
And the 5th, AI opportunity.
AI devices. This ties back to the Ray-Ban glasses and Quest.
Ah, right. The hardware play.
Yeah, they see glasses as the ideal form factor for AI and, eventually, the metaverse. Sales of those Ray-Ban Meta glasses apparently tripled year over year.
Tripled. That's strong growth.
And they said usage is high, too. More launches planned with Essilor Luxottica. And on the VR side, Quest 3 is apparently driving deeper engagement.
Okay, so these 5 AI bets, they all depend on serious underlying tech, right?
Yeah.
Models, infrastructure.
Absolutely critical. It all runs on their own AI models. They mentioned Llama 4 is coming and their infrastructure, and they're heavily investing here.
Accelerating investment, you mean?
Yes, they specifically said they're accelerating the infrastructure build-out, increasing planned investment for the year because demand for this stuff is so high internally.
What are they focusing on with the models like Llama?
Key things seem to be low latency, crucial for smooth voice interaction, and really long context windows, which helps with personalization, remembering past interactions.
And they mentioned huge models. Behemoth.
Yeah, using giant models like this behemoth one to basically train or distill down into more efficient models that can run on devices or respond faster.
Fascinating tech. Okay, stepping back from pure AI, what else is driving the financials? Revenue performance drivers.
It's a combo, really. Engaging experiences, keeping users there, and then getting better at monetization. They called out strong growth in video consumption driven by better recommendations.
LLMs helping there too.
Yep. They said integrating LLM tech into recommendations gave Threads, for example, a 4% lift in time spent. Small percentages, but huge scale.
And on the monetization efficiency side,
Yeah.
making more money per user.
Right. Optimizing ad load, how many ads people see, but also making those ads perform better with AI. They mentioned a new model called GM Generative Ads Recommendation Model.
GEM, what does that do?
Early tests on Facebook Reels showed it increased ad conversions by 5%. Again, leveraging AI for better results.
And advertisers are using their tool suites, like Advantage Plus.
Adoption is strong there, yes.
Yeah.
They keep rolling out new features too, like AI-powered video expansion and image generation for ads. And they're improving attribution, figuring out which ads actually drove sales, seeing big lifts there, like 46% incremental conversions in tests.
So where's the money going? Capital allocation priorities.
Primarily infrastructure, like we discussed, and talent, especially technical roles supporting monetization, infrastructure, Gen AI regulation and compliance stuff, and reality labs, of course.
Okay, let's talk outlook. What did they guide for Q2 and the full year? Investors always focus on guidance.
Right. For Q2 2025, they expect total revenue between $42.5 billion and $45.5 billion, a pretty wide range, but implies continued growth.
And expenses for the full year.
They actually lowered the guidance slightly, now expecting $113 to $118 billion for the full year 2025.
Lowered expenses, but didn't you say they were increasing investment?
But that's CapEx. They increased the full year 2025 capital expenditure guidance significantly, now $64 billion to $72 billion.
Okay, so lower operating expenses, but much higher capital spending. Why the big CapEx jump?
Mostly those additional data center investments for AI, plus they mention higher costs for the actual infrastructure hardware. It's getting expensive.
Got it. And the tax rate for the year?
Expected to be between 12% and 15%, so higher than Q1's rate.
Always need to watch the regulatory environment, too. Anything brewing there?
Yes, particularly in Europe. The European Commission's decision on their subscription for no ads model under the DMA, that could hurt.
Hurt how?
Potentially negative impact on European business and revenue, they warned, possibly as early as Q3 this year. They plan to appeal, but might have to make changes anyway.
That's a significant risk. Okay, let's pivot to the analyst Q&A. What were the key topics and insights there?
A lot of focus, again, on AI, details about the LLM advancements, latency, voice, context windows. The distillation strategy came up too.
What are people actually using Meta AI for?
Top uses seem to be information gathering, sort of like search, social interactions, help with writing and interacting with images or visuals. WhatsApp is apparently the highest usage platform for it right now.
Interesting. And the standalone app?
They see that as important for establishing leadership, especially in the US market.
Any other headwinds mentioned? Maybe e-commerce?
Yeah, they noted some reduced spending from Asia-based e-commerce exporters shipping to the U.S., possibly related to expected changes in the de minimis import rules.
Right, that could impact spending and more justification for the huge CapEx.
They basically doubled down, saying world-class infrastructure is a major competitive advantage for AI and their core business. Demand for compute is just really high across the company.
What about AI for business messaging? Any progress?
They're testing AI agents for sales and customer service with small businesses. Focus is on giving businesses customization and control. The long-term vision seems to be like a unified AI agent across all their services.
What makes Meta think their AI will win? Competitive advantages.
They highlighted personalization using their understanding of user context and building memory and multimodality, handling voice, text, images, video seamlessly.
Makes sense. Back to the EU DMA decision. Any quantification of the potential impact?
Not really. They said it's too early to quantify, but they did remind everyone that the affected European region was about 16% of their worldwide ad revenue in 2024. So not trivial.
16% is significant. Any specific advertising verticals showing weakness?
Most verticals were healthy, they said, but some softness in gaming apparently facing tough comparisons to prior strong spending and also government politics, which is typical after election cycles.
And the Reality Labs losses? Still committed despite the red ink?
Yeah, they acknowledge the losses but framed it as warranted investment. They're focused on efficiency, but the strong traction of the AI glasses and the sheer size of the long-term opportunity justifies continued spending. Focus now is scaling distribution, then monetization later.
Okay, a comprehensive picture. That brings us to our This Is Not Financial Advice segment. Time for some outrageous but plausible trade ideas based on this call. You go first.
All right. So given Meta's massive accelerating CapEx spend on AI infrastructure and the fact that AI compute is clearly a bottleneck, how about this? Go long, a key supplier of the super advanced semiconductor equipment, the companies making the machines that make the AI chips.
Okay, long the enablers. What's the hedge?
Hedge it with a short position in a cloud provider that doesn't have its own strong, vertically integrated chip strategy, one that relies heavily on buying chips from others.
The rationale being?
The rationale is that the insane demand for AI hardware benefits the equipment guys disproportionately near term. Meanwhile, cloud providers buying third-party chips might face margin pressure or just struggle to get enough supply.
Interesting angle. Okay, my turn. Building on the Ray-Ban Meta AI glasses traction.
Yep.
They tripled sales, right? And the partnership with EssilorLuxottica.
Yeah, that seemed like a real bright spot.
So the outrageous but plausible trade, go long EssilorLuxottica or a similar major eyewear player integrating this tech. They're Meta's partner here.
Okay, long the glasses partner. The hedge.
Short, a traditional smartwatch or maybe a fitness tracker company. One that makes purely single-purpose wearables.
Betting that smart glasses eat their lunch.
Exactly. The bet is that these AI-powered glasses become much more versatile and start cannibalizing the market for less capable wearables. The early adoption suggests they might have disruptive potential in that space.
I like it. Outrageous, but definitely plausible if that trend continues.
So that wraps up our deep dive into Meta's first quarter 2025 earnings call, brought to you by TalkTickers.
We've pulled out the key numbers, dug into that huge AI strategy, and looked at what it might mean.
And just a reminder, of course, this conversation is purely for informational purposes. It should absolutely not be taken as financial advice. Always do your own research.
Definitely. But what stood out to you in this deep dive? What are your thoughts on Meta's big AI gamble?
Let us know. Join the conversation. We'd love to hear your perspective. Tune in next time for another deep dive into the world of earnings.